Ladies and gentlemen, good day and welcome to AU Small Finance Bank Q3 FY22 earnings conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Aseem Pant, VP Investor Relations. Thank you, and over to you, Mr. Pant.
Thank you, Neerav. Good day to everyone, and welcome to AU Bank's earnings call for the third quarter of FY22. We thank you all for joining the call today, and we hope you and your dear ones are safe and well. For approximately the first 30 minutes of the call, we will have brief remarks by few members of our senior management, followed by 30 to 45 minutes of Q&A. Firstly, we will have our MD and CEO, Mr. Sanjay Agarwal, share his thoughts on the performance and overall outlook for the bank. He will be followed by our ED, Mr. Uttam Tibrewal, who will share his thoughts on business outlook and asset strategy, and then by our Group Head Liabilities, Mr. Rishi Dhariwal, who will share his thoughts on liabilities outlook. Finally, we will have Mr. Vikrant Jethi, Head of Collections, who will discuss asset quality for the bank. Besides them, we also have few other members of our senior management to answer any questions you might have. For the benefit of everyone, we would humbly request that the number of questions per participant be restricted to a maximum of 2, and to join back in the queue or mail us in case you have any further questions. With that, I'll request our MD and CEO, Mr. Sanjay Agarwal, to share his thoughts on the bank's performance and outlook.
Thank you, Aseem. Good evening, everyone. Namaskar. Thank you for joining in. We hope that you and your dear ones are doing well and keeping safe. While I want to say happy 2022, we all know that this year started with a bumpy ride. Unlike the previous years, the mortality rate of Omicron variant is low. So seems like that we are already on the road of recovery. In terms of business impact, there are small continuity issues. People, be it our employees or customers, are getting infected but are coming back with a shorter cycle of 5 to 7 days. That said, till now, for the January, largely our business momentum around asset growth, its quality, and other business parameters remain on course. But to give you an overall sense of quarter 3, we saw a near normal operating environment with an improvement across all key parameters, aided by strong festive seasons and resilient customer sentiment. Hope you have seen our recently declared quarter 3 results. We have shown a strong performance in the last quarter from deposit to asset to payments to digital. Sharing key highlights as under. We launched 69 new touchpoints in this quarter. We hired 2,000 plus people, taking the total workflows plus of 25,000. We have delivered the highest ever growth in deposits, that is 49% year on year. Continuing our focus on low cost stable funds, we have reduced our cost of money by 89 bps in this year. We have maintained ample liquidity throughout the quarter. We disbursed close to 8,000 crore of loan in the last quarter, the highest ever in the history of AU. Our balance sheet size grew by 26% year on year, net worth grew by 32% year on year, and our capital adequacy ratio is 22%, including 9-month profit. And generated the highest ever operating profit in this quarter. ROA stood at 2% plus and ROA at 17% plus. Asset quality is getting back to pre-COVID level. GNPA reduced to 2.6 from 3.2 quarter on quarter. Net NPA is also reduced from 1.7 to 1.3. An important RBI circular on potential norms has brought the NBFC asset recognition on par with commercial banks. This will provide a level playing field for banks like us which operate in similar customer segments. We can confirm categorically that the recent changes have no impact on AU Bank, as we have been following NPA regulation norms since 2017 and daily NPA tagging from since 2019. More on this will be covered by my colleagues. The very important update is this, that we got our brand ambassadors appeal going on and the uniqueness for our products. We have seen extraordinary response for our digital bank, whether it is in terms of increase in brand awareness and the brand consideration score or increase in ETB and NTB registration on AU010 app. The key highlights are around this. All our digital properties have done phenomenally well with 1 lakh plus credit card issued, out of which 53% credit card holders are first-time credit card users. And we also installed 3 lakh plus UPI QR. Initial trends from the video banking experience have been quite encouraging in terms of enhancing reach, acquisition, and engagement. AU0101 continue to see strong traction with 39% quarter-on-quarter growth in user registration. 2 lakh plus non-bank customers also got registered on AU0101. I would like to congratulate the team and the customer for this achievement in this time. I also take this opportunity to welcome Shri H.R. Khan Saab, ex-RBI Deputy Governor, on our board as an independent director. I believe bank will immensely benefit from regulatory experience of Khan sir, spanning for over 4 decades, and I personally look forward for his mentorship. I would also like to share that we have taken a step towards strengthening our business model by introducing 10 SBUs, of which the details are shared in the presentation. Each business unit will have its own vertical structure supported by a common horizontal across bank support architecture. This will sharpen the focus, enhance the ownership, support with the bandwidth management, and lead to a development of new level leadership for the bank. In the coming times, we will arrange the calls with individual business units to give you more color around their working and strategy. We plan to hold the first of this session on 10th of February 2022. The IR team will share more details in due course. The very foundation of AU Bank was laid for empowering the economically weaker sections by providing them better access to credit. We work on a unique formal Robin Hood model by garnering deposits from urban markets and disbursing in core markets. So 76% of our liabilities are coming from urban market and 65% of our lending happens in core market. Our purpose of being an SFB guides us and drives us every day. Continuing our legacy, we have exceeded the requirement of key licensing guidelines with 86% loans to the priority sectors, 63% loans with ticket size less than 25 lakh, and 30% of touch points present at unbanked rural centers. Our commitment to financial and digital inclusion remains unwavering. We are working towards building a society where every individual has access to financial services irrespective of his or her socio-economic background. Through our efforts in digital and digitization, we have been able to positively impact the environment by reducing our carbon footprints. Our digital customer onboarding journeys have led to a positive action in terms of reducing paper and fuel usage. We have progressively approaching on our accepting diversity of all kinds, demographic, experiential. We have formed a committee on diversity and inclusion, and the committee is working towards making AU a more inclusive workplace. The strong governance has been the backbone of our growth since the start of our journey, which has been validated time and again by markets, regulatory rating agencies. I'm happy to share that CRISIL ratings have revised our credit rating outlook from stable to positive during the quarter. This is a strong validation of our banking franchise and asset quality despite the pandemic-induced challenges. Quarter 3 FY22 marks the completion of 19th quarter as a bank. What a roller coaster ride, full of excitement, sustainable growth, and resilience. The last 8 quarters remained under the weather due to the pandemic. Very grateful to the Government of India and RBI for their wholehearted support in terms of relief, reforms, and packages. We will continue to invest in our 10 strategic business units and shall always be promising and a likable franchise to be joined by people. Today, we are serving 23 lakh plus customers as the largest small finance bank, offering over 30 plus products at 80 plus banking touch points across 15 states and 2 union territories with a team of 25,000 plus employees. While our journey as a small finance bank was fraught with the headwinds like demonetization, NBFC crisis, bank crisis, and the pandemic, we believe that whenever things normalize, then this country, this economy, this platform, and this team will do wonders. So we remain optimistic with cautious approach while continuously working towards our purpose of developing the largest retail franchise. So this makes an end of my narration. And thank you and stay safe. Handing over to Uttam for his business outlook and asset strategy. Thank you.
Thank you, Sanjay. Namaskar. Good evening, everyone. Hope you all are healthy and happy. As Sanjay mentioned, our performance in Q3 FY22 has been consistent and stronger. I personally see it as a reflection of continuous efforts of our team to reposition the bank since the onset of COVID. 7 quarters ago, we took the challenge to take COVID as an opportunity to further strengthen our foundations by redefining our distribution strategy to gain reach through branch banking and density through digital. Continuous engagement with the customers as solution providers, reinforced and restitched the team to focus and effectively build a more retail and granular bank. As we have shared in the past 2 quarters, by gauging the situation early on, deliberating and tweaking our strategy and displaying agility, we have managed to track the market and deliver performance on all business and financial metrics. Our efforts on building a strong retail tech-led franchise had started to deliver results on all the parameters, be it our focus on CASA ratios, CD ratios, our brand visibility, video banking, our digital bank AU 0101, our credit cards, or expansion of our leadership capacity. Aided by good festive season and strong demand across wheels, home loans, and business banking, we recorded our higher ever quarterly disbursement for the quarter at 8,152 crores, up by 33% year on year. In line with our narrative in Q1, Q2, we got the benefit of working on the ground and our customer connect and were able to further reduce our gross NPA to 2.6% and net NPA at 1.3% from 3.2% and 1.7% respectively. Wheels business financed 80,000 plus vehicles during Q3 FY22, amounting to a total disbursement of rupees 3,045 crores, registering a growth of 14% year on year and 60% quarter on quarter. Personal segment contributed 46% of disbursement, of which 20% were farmers. Tractor contributed 10% of wheels disbursement in Q3. Total AUM of wheels is now rupees 15,525 crores across 6.7 lakh vehicles and 5.8 lakh customers, registering a growth of 15% year on year and 9% on a quarter on quarter basis. At AUM level, 60% of the financing is for new vehicles, 25% is used vehicle, 13% is cash on wheels, and 2% is two-wheelers. Limited supply of semiconductors continue to constrain the growth for new passenger vehicles despite strong demand order backlog. However, underlying demand remains robust and used vehicle segment continue to be direct beneficiary of supply shortage in new vehicles. Long waiting periods in new cars, affordability and discontinuation of diesel vehicles by major OEMs will keep used vehicle demand buoyant in coming months. In SBL business, demand is still to reach the pre-COVID levels. In Q3, the business saw a year-on-year disbursement growth of 10% with disbursement of rupees 1,629 crores to 15,546 MSME businesses. Total AUM of SBL business had now reached to 15,283 crores across 1.8 lakh MSMEs, registering a growth of 19% year-on-year and 6% on a quarter-on-quarter basis. Our housing business currently operates out of 241 branches across 8 states and financed 4,500 plus houses during Q3 FY22, amounting to a total disbursement of rupees 473 crores, registering a growth of 55% year-on-year and 26% quarter-on-quarter. Total AUM of housing business is now 2,099 crores across 22 dwelling units, registering a growth of 113% year-on-year and 24% on quarter-on-quarter basis. At AUM level, the average ticket size is 10 lakhs and average LTV is 50% at the end of Q3 FY22. The bank has been able to help 9,000 plus customers to avail subsidy under PM Awas Yojana, wherein 4,600 plus EWS, LIG, MIG customers have already availed subsidy of rupees 100 crores. Our commercial banking business comprises of 4 business segments, namely business banking, agri banking, NBFC lending, and construction financing. Together, these businesses account for 15% of our AUM and primarily balance sheet driven lending where we extend working capital financing to MSMEs and SMEs. In Q3 FY22, commercial banking business saw disbursement of rupees 2,215 crores, a year-on-year growth of 139%, with strong growth coming in from business banking and agri banking, which saw year-on-year increase in disbursement by 76% and 136% respectively. We issued more than 50,000 credit cards in Q3 and have achieved a run rate of 20,000 cards per month, taking us closer to top 10 credit card issuers in the country in terms of new card issuances per month. I'm happy to share that 31% of all savings accounts opened in Q3 has been sourced digitally via AU0101 by our video banking channel. Video banking is emerging as an alternate distribution channel with 35% of accounts acquired from non-AU bank locations and 78% customers are urban with 49% salaried profile. In terms of servicing, video banking channel can provide 400 plus different services and is now handling 750 calls per day. Similarly, AU0101 continue to see strong traction with 39% quarter-on-quarter growth in user registration and active customers measured as monthly active users has gone up by 38% over Q2. Our strategy to build a banking ecosystem around merchants and traders by using UPI QR code as an entry strategy, opening their current accounts and using transaction data to develop analytics-based lending is progressing well. Our QR codes are now deployed at 3 lakh plus merchant points. Apart from providing visibility to our brand, this has also helped us to retain merchants' accounts, and we have already seen rupees 1,300 crores of throughput via these accounts. Our special focus on asset side has been automation, digitization of processes so we can reduce TAT and improve productivity. We have piloted end-to-end onboarding solutions in SBL and Wheels business, and solutions are being developed for other businesses verticals. Our objective is to digitize the entire onboard journey of the customer from sourcing to disbursement and maximize the use of digital in servicing the customer. We remain committed to increase our product per customer and are strengthening our products, processes, and channels for achieving greater cross-sell using data analytics. All in all, I remain excited, optimistic, and look forward to sharing more with you in coming quarters. With this, now, I invite my colleague Rishi Dhariwal to share his views on the liability side of the businesses. Thank you. Stay healthy, stay safe.
Thank you, Uttam, and good evening, everyone. I sincerely wish you good health as we navigate these unprecedented times. I will speak about our liabilities, branch banking and product initiatives are being built to make a long-term sustainable retail business. We continue to execute our strategy of boosting the retail mix of our overall portfolio and strengthening the deposit base while achieving an optimal CASA mix. This has been made feasible by enhanced efficiency in the branch banking channel and constant digital innovations which have made banking with us convenient for our customers. We are driven to build a predictable, stable and scalable liability franchise. We have made targeted efforts to build a high quality retail CASA book. To provide some context, our monthly Royal and Platinum account acquisition, our premium savings account offerings, has increased 89% over 6 months from June 21 to December 21, while our monthly current account acquisitions have increased 38% during the period. 60% of the savings account customers acquired in the year are active on our AU0101 app, and over 76% of the current account customers acquired in the year are active on internet and mobile banking. While expanding our liabilities book, we have been prudent in staffing our branches based on the potential of the geography, thereby optimizing our frontline sales team. While doing this, we have been extremely focused on increasing productivity expectations from every single resource, which has taken our productivity to 6.2 RPC per employee in December 21, as we like to abbreviate Royal, Platinum and current accounts in the bank, from 3.5 RPC in June 21. In the quarter, 1.8 lakh unique debit card holders made over 11 lakh transactions amounting to 320 crores, reflecting an increasing trend of customers using our bank cards for making their purchases and thereby transitioning to use of AU bank account as the primary account of the customer. Our customers bought close to 25,000 insurance policies through our partnership with ICICI Prudential, Future Generali for life insurance, and Aditya Birla Care, Tata and Chola for general and health insurance. We have more than 51,000 cumulative 3-in-1 trading accounts through our partnership with Motilal Oswal Financial Services. The AUM of our mutual fund investments done by our customers has grown by 13% during the quarter. Number of transactions being done by customers with us is a clear measure of the engagement as well as indicator of potential to buy further products from us. We have 68% and 52% of our CA and SA customers respectively regularly transacting with us, with 60 and 23 average customer initiated transactions for CA and SA accounts respectively for the transacting customers. To ensure that the customers are fully embedded with us, we provide them with full range of payment, investment and insurance solutions, namely debit card, e-com and POS activation, UPI, bill payments and FASTag, SIP, 3-in-1 asset products, life and health insurance. We have 59% of our current account and 36% of our savings account customers use 2 or more of our products. PPC has risen to 1.93 in December 21 from 1.34 in March 21 for CA customers and to 1.5 from 1.37 for savings account customers. Of the 9.6 lakh registered users on the AU 0101 Super App as of December 21, over 6.9 lakh plus customers are liabilities customers. We recorded over 37 lakh transactions in Q3, a 30% increase from Q2. We launched the AU Shopping Dhamaka campaign in October 21. Over 1.2 lakh customers participated and made 6.85 lakh transactions, spending close to 260 crores. We observed significant improvements in customer balances during the campaign and thereafter as well. We have initiated our expansion to geographies where our presence was lower previously so that we can cater to customers across more and more geographies and serve them with our 21st century banking services. We will provide you more update in the coming quarters on the same. Next, my colleague Vikrant will provide an update on asset quality. Thank you.
Thank you, Rishi. Good evening, everyone. I will be giving a brief perspective on asset quality. Most of the businesses saw increased activity during the quarter, which resulted in better customer cash flows. We saw collection efficiencies north of 100% during the entire quarter. In quarter 3, we saw a conducive environment and all restrictions imposed by various state high courts were lifted, and this aided in faster implementation of legal recourse. Average collection efficiency in quarter 3 was 106 compared with 109 in quarter 2. Customer activation improved to 91% in quarter 3 compared to 90% in quarter 2. Our gross NPA reduced by 57 bps from 3.2 in quarter 2 to 2.6 in quarter 3. In absolute value, there was net reduction of 94 crores from 1151 crore in quarter 2 to 1058 crore in quarter 3. Net NPA reduced by 1.7% in quarter 2 to 1.3 in quarter 3. We saw gross reduction of 343 crores in quarter 3 from quarter 2 closing NPA of 1151 crore, resulting in 30% resolution during the quarter, wherein 70% resolution happened through repayment, about 20% resolution happened on account of security disposal, and 10% was on account of technical write-off. If we further introspect the current NPA pool of 1055 crore, we have enforced security on approx 10% pool and asset is in bank's possession. As on date, we have initiated legal recourse, either SARFAESI or Section 17 arbitration on 84% pool. On balance 5% pool, we will be initiating legal recourse soon. In nutshell, all the underlying loans are granular and secure, and we expect recoveries or security enforcement in due course of time. As we had communicated in our Q2 commentary, basis on-ground feedback, we have identified non-workable pool wherein all collection efforts have been exhausted and bank has done technical write-off of 39 crore. Here, collection efforts are being abandoned and future recovery may happen through ongoing legal proceedings. We shall continue to evaluate such non-workable pool in future as well and take appropriate measures. Out of total gross advances of 40,700 crores,
as of 31st December, 61% of book was originated after March 2020. I reiterate that 61% of the gross advances have originated post onset of pandemic, and 92% of this book is current and contributes only 0.44% of our GNPA. The resilience of this book has validated our approach of underwriting and customer segment we cater. As on 31st December, standard COVID restructured book stood at 1,260 crore, which is 3.1% of our gross advances. Billing has started on 92% of the restructured book, and 9% of this book is NPA as of 31st December. Asset quality performance in the build pool has been within expectations. PCLGS gross advances as of 31st December stood at 873 crore. On the provisioning coverage, bank is carrying provision of 537 crores against gross NPA of 1058 crore with PCR of 51%. Additionally, there is provision of 205 crore against standard restructured book. Furthermore, bank continues to carry contingency provision of 300 crore, which stands at 75 bps of our advances. This further strengthens balance sheet and makes us better prepared for any unforeseen events. Keeping NPA resolution trend of first 3 quarters, where 65% of NPA resolution has happened through normalization with no cause loss incurred, and only on remaining 35% pool, security enforcement or one-time settlement was done, wherein there was cause loss of 32%. Therefore, we feel confident that PCR of 51% is quite likely to be more than sufficient to cover any credit loss arising from this portfolio. Over and above this, bank is also carrying contingency provision for any unforeseen slippages and specific provision against standard restructured asset. However, we continue to remain cautiously optimistic as there is still little uncertainty on the situations which might emerge post third wave. Thank you.
So, Neerav, we can open for questions now.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. The first question is from the line of Bhavik Dave from Nippon India Mutual Fund. Please go ahead.
Yeah, hi. Good evening, sir. Thank you for the opportunity. So 2 questions. One is on the margins. So I see the incremental spreads are a little lower than what we were reporting in the last quarter. Just want to understand how the margins have been at the 6.3% range for like 2 quarters now. Just wanted to understand incrementally with cost of funds benefit. Now it seems that incremental cost of funds are flattened out at 5.3, and with rate environment being like on the other side, what is the margin or spread that we will be comfortable working around? So is it 6 to 6.3%, or what is the kind of margins that we will be happy to work with?
Mahavik, Prince here. Your line is not very clear.
Okay, sorry. Am I audible now?
Yeah.
Okay, so sorry. My question was regarding the incremental spreads that we see that they have come off by 20 basis points during the quarter, and however the margins have remained flattish at the 6.3% mark. Wanted to understand what is the sweet spot that we look forward, considering the cost of funds incrementally have normalized at 5.3% incrementally. What should be a comfortable margin run rate that we would be happy to work with? Like, is it 6 to 6.3, or will it be okay to work at a lower margin as well? Just wanted to understand that.
So Bhavik Sanjay here, right? This time I think because of our cost of money going down and investment also getting moderated, we got an upside around NIM, right? But I don't think that 6.3 is a sustainable NIM for us. We want to target around 6%. 5.8 to 6% in the longer run. And we also have to see that how the interest rate cycles also moves from here, right?
Correct.
So there is a risk on it, but we have the ability to lend on a higher rate too, because we are into retail assets. Yeah. So I hope that you can manage his NIMs around 5.8 to 6% range in the long run.
Perfect. That helps. And second question is regarding the cost of operating cost. The slide 21 is very useful, wherein the 157 crores that we are doing for investments for future. Just wanted to understand, and some part of the 50% of it seems to be towards the newer businesses that we are incubating. So that might sustain for maybe a few more years because that's a growing business. But out of this 150 odd crores, this might be like 180, 200 odd crores for the year. How should we think about it for the future, right? Like FY23 or like going ahead? Should this number be around 150, 200 odd crores, or this will relatively increase with our investments because the businesses that we are trying to grow? So just wanted to understand that.
I completely understand. So, as an executive, we need to take many decisions around your matrices, right? So, and I already commented in my earlier say that, we are looking to NIMs, reducing our costs, building a retail deposit. So this one OPEX, we are not so much focusing as of now because we were going through a pandemic. And the quarter one was completely washed out. There was a capacity built up in the organization which was not used. And we also want to try many things around digital because if you don't do digital initiatives, we might not be there after 10 years, right? So I strongly believe that AU needs to invest more in tech, more in distribution, more in other digital initiatives, and of course building the brand. So I presume that on the scale this amount will go up. Maybe around this year is around 150 crores, maybe next year is around 250 crores. But we want to keep this investment going on because ultimately this will make AU the journey forever.
Sure, that's helpful. Thank you.
Yeah, so I'm not too worried about the cost of income here.
Perfect, that's helpful, sir. Thank you.
Yeah, Bhavik, thanks so much.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Amarnath from Ministry of Finance. Please go ahead.
Hi, Mr. Agarwal. Just need to understand the rapid speed of increasing of this credit card issuance. Last quarter, you say around 50,000 cards have been issued. And we all know this credit card is an unsecured business. AU, by fundamentally, is generally targeting the secured kind of business. So just try to understand what's the business strategy of increasing this credit card, which is mostly unsecured, in a highly populated area where not many big banks and other institutions are there. What is the strategy here? That's my first question.
No, a good question. So I think the detailed presentation is being done on 10th of February on our strategy around credit card. But I'll give you some brief highlight around it. Like for me personally, credit card is one of the most important digital payment method, right? So if you don't have a credit card in system, then many people don't like you as a bank, and we witnessed it in first 3-4 years of our journey. So it wasn't kind of compulsory for us to launch credit card to make people believe that, we want to really become a digital bank in that sense. Second, this is more of an acquisition strategy for us, right? Because many customers don't want to bank with SFBs, but credit card gives us that advantage that, we can offer them a better credit card and then they become our customer and then we can become their primary banker, right? And third, your understanding of the subject that we can't handle unsecured, somehow someday we need to start that, right? And credit card is relatively a better project to start unsecured because here, maybe only 5 to 10% of your outstanding book becomes an EMI book, right? Otherwise, customers generally pay on time, and we charge around 36% if customer revolves the line, right? So there is enough cushion available to us in case any default comes. But as of now, in last 6 months onwards, our data says that we are absolutely on track. And one more data point, we are issuing around 70% card to our ETB customer, right, who has a travel card or who has some data point with us. And 30% is only around the NTB, right? And one more data point for you that, 70% cards are issued into the semi-urban and rural areas.
Your voice line is not clear.
Sorry?
So voice is cutting in between, sorry.
Oh, I'm sorry. So, 70% credit cards are given in the core markets of us, so where we have the much collection efficiency, right? So I think these are data points which makes us more comfortable, and we really want to invest more and more in this credit card because as we move forward, we also have seen that people generally want to use credit card over the debit cards because debit cards open up their risk on the cyber. Where the credit card has a limited risk on their hand, right? So, and we are more, bullish on this subject. It is been built by one of the finest professionals in AU Bank, our ex-CRO, Mayank Makande. So, and he's building the team very beautifully. So, I hope that this will become one of the most important business in times to come.
Thank you. My second question, sir. See, as we all know, that the entire world and of course the India will now move towards the higher interest rate regime. Today or tomorrow, RBI will have to increase the rate. But one good thing AU has done that in the last few months and quarters, they built up a very huge CASA franchisee, and I'm sure they are more of they will be all at a kind of a permanent customer. Now, what's your thought process as the interest rate increase? Our lending side, the yield probably will increase, whereas my cost of borrowing, if it is mostly coming from CASA, especially the old CASA up to December 21, my net yield is supposed to increase going forward, provided that the interest rate cycle really takes off sometime in this 2022-2023. So what's your thought process here? And just to add on this, am I to say whether this deposit base, CASA base, will also be having the increase in interest cost if the interest cost regime increase? So net, how the bank is going to get benefit?
Yeah, so I think not many questions in one question. So say that, everybody is predicting that there will be an upside in cycles, but you will appreciate that AU is in the markets of lending where generally we have the ability to pass on the interest rate upside to the customer, right? We have actually have reduced our lending rate by close to 150 basis points in last 3-4 years. Because we were getting the advantage around interest rate, right? And these generally market are being dealt by NBFCs, right? Who lend them at a higher rate. So that's the whole advantage with us that in case interest rate cycles move up, we have that possibility to transform the rate to the customer and make ourselves on a similar NIM number, and further you will see that our interest rates still we are offering around 7% on our bracket of 25 lakh to 1 crore. That can also be, adjusted to really make your cost of money lesser cheaper. And of course, at a scale, because this may happen in next 2 years, the scale will also help you in managing your operating expense. So I think these are 3-4 reasons where we believe that, AU still is protected around any interest rate cycle upside.
Thank you very much. And maybe I will take one last small question. So though the GNPA percentage has been reduced, but the absolute value of the GNPA has reduced from 1151 to 1058, I think 94 crore reversal only. If I take it, the last quarter, the GNPA was reduced sequentially by 345 crore. Compared to that, in this quarter, it is reduced by only 94 crore in absolute value. Now, what does it indicating in terms of the recovery from those GNPA?
No. I think you will appreciate that last quarter, the quarter 2 and quarter 3, quarter two, we commented in our call that it has a lag effect of good 6 quarters. We started doing the enforcement of security last quarter itself, and people were coming up and paying up. So that was a phenomenal quarter for us in terms of reduction in NPA. But you'll appreciate that our assets are around 14%. Our retail assets are around 14% yield, and we also in the similar customer segment where other players also operate. If you compare our NPAs to them, you will see that how better we are doing in terms of our asset quality, right? And slowly, our in a pre-COVID level also our NPA was around gross NPA was around say 1.6, 1.7, right? And we are now just away, in terms of that number, just 1% away, right? So in my opinion, next 2 quarters, if everything remains good, we'll be touching that number again, right? So I think that slowly, we are getting at that level, and that is good enough for us to remain happy and see how well we are progressing in that terms.
And are you happy with this net PCR of 55%, or do you want to target that provision cost by more, or are you happy with this 55%?
You will appreciate that if you really see our net credit loss historically, it remains around 15 to 20% of our gross NPA, right? And we are keeping around 50%, not the 50% in GNPA, and plus we have a contingent reserve around 300 crores for any unforeseen. So we are very well comfortable in keeping PCR around this number.
Okay, thank you. Thank you very much for answering the question.
Thank you. I request all the participants, please restrict to 2 questions per participant. The next question is from the line of Hiral Desai from Anvit Portfolio. Please go ahead.
Hi Sanjay, congrats on the quarter, and like Bhavik said, appreciate the information on operating expense in slide number 21. So thank you for that.
Hiral, sorry to interrupt you. May I request you to speak a little louder, please?
Is it better now?
Yes.
Yeah.
Yeah, Sanjay, congrats on the quarter. Thank you for slide number 21 and additional disclosures on operating expense. Appreciate that. So I had a couple of questions. One was, fees net of the processing fees. So if I look at the non-interest income net of the processing fees, how should one look at that number over the next couple of years? Because we've now started issuing credit cards. We've scaled up distribution partnership on insurance, MF, DMAT. So and the franchise is obviously expanding. So how should we look at that number? Because obviously the loan processing fees are picking up in sync with the... Sorry,
go ahead.
No, I'm saying the loan processing will obviously pick up with the disbursement, but net of that, just wanted your thoughts on all the other pieces.
Yeah, so we are building a franchise around now, cross-sell around insurance, investment. You will appreciate that 2 quarters back we got our merchant again classifying as priority sector, and we got the PSLC income last quarter too, and before quarter that also. So I think the PSLC income, the cross-selling around insurance, investment and trade, these are the 4 working on, and of course there is still a issue of continuity around it because of pandemic. So how much it can go up, we would love to only comment when things become normalized, right? And as of now, in whatever quarter we get the opportunity, we want to use that. But on a larger traction that how much it can be a part of our total income, we really want to go back to drawing board maybe in the month of April once the stability is there, right? And of course, loan processing and other income is directly related to the business numbers, right?
Right.
So that will go up if the business goes up.
Fair enough. The other question that I had was in the housing where you had 900 crores odd disbursement in 9 months. What would be the split between new loans and balance transfers?
Uttam, do you have a number of this? Is it very specific? Yeah.
So balance transfer is very marginal, around 7 to 8% only. Because the new franchise, so it's largely NTB customers or cross-sell to my existing customers. balance transfer is not too much in this.
So what will be the percentage of existing AU customers within this? So let's say your Wheels and MSME customers who have been given housing loans.
No, largely as I said is NTB. Again, ETB would be around 15% only. Largely to NTB only.
Got it. And
Sanjay, just a new franchise, new team, yeah.
Just had one request, since you are sharing so much of information on the liability side, if you could, sort of put it in the PPT. It's, difficult to keep a track on a call. So just had that one request, and all the best for future.
Good morning.
Yeah. Sure. Thank you.
The next question is from Amit Nanavati from Nomura. Please go ahead.
Yeah, hi. Question on credit cost outlook, right? 9 months basically in these 3 quarters, and this was wave 2 impacted years. We kind of averaged around 60 to 70 basis points of credit cost, right? And provision cover of upwards of 50% versus 15 to 20% kind of LGDs that you experience, right? So to that extent, and now NPA is also back to near normalized level. Where do you think credit cost, has it bottomed out here? Will it be 50, 60 basis point, or you can see some reversals also at least for the next 1 year?
Difficult to answer, brother, because still we are going through a COVID-3. If you ask me that if there was no COVID-3, I would have said that we would have bottomed out, in terms of gross NPA and the kind of losses we have, which is around 0.3, 0.4. We're talking about 0.5, but ideally it would have been 0.3, 0.4. In the pandemic it would have reached not more than 0.5. So I would say let's wait for this quarter more, to have more clarity that how can we, next year in terms of NCL. Otherwise, I'm very hopeful that we have largely covered our any kind of risk in asset by creating much contingent provisions, buffer, and by providing the any kind of losses we are debiting to P&L, right? We're not using provisions. So largely we are covering ourselves in a way that, no unforeseen circumstances should challenge us. But I would say around 0.4, 0.5 is the amount I'm looking for.
So that's the net credit, Amit. I think from credit cost perspective, that would be in line with our historical range of 70 to 90 bits.
Got it. Secondly, just if you can just point out the new customer additions in Wheels and SBL portfolio in the last 1.5 years, that would be helpful.
Was your question the new customer additions in the Wheels and SBL portfolio?
Yes.
So I think Uttamji's speech covered that. Broadly, given that there has been a pandemic and business has been good, so I think the growth in customers could be in line with the growth of, we don't have that specific number as of yet, in terms of growth, but the number of customers is already articulated by Uttamji. I think around 5.5 lakh customers, 5.8 lakh customers on the Wheels business, and around 1.8 lakh merchants on the SBL business.
Basically, I just wanted to understand of the incremental disbursements that we have done in the last 1.5, 2 years now, right? 61% is newly originated in the pandemic era. How much of that would be existing customer? How much of that would be new customers base?
Broadly, it will be NTB, Amit, and data keeping question. If you can write to us, we can respond back to you if there's anything specific.
I'll do that. No problem. Thank you.
Thank you. The next question is from the line of Arvind from Kotak Mahindra Bank. Please go ahead.
Yeah, so my question is, on the next triggers for ROE now that we are in the mid-70s, high teens, and given that we are already kind of north of the targeted mean range is applied to 8 to 6%, the cost to income is not going to moderate in the medium term at least, and credit costs over the last couple of quarters have been broadly in range. So where do you see the ROE going from here? Have we achieved where we want it to be, or are there other triggers that we can't take there?
So, Arvind, your question, I mean, you're not very audible, but if I understand your question correctly, what you're saying is that we have reached the ROE of 17% in this quarter, and where do we expect it to be in terms of a long-term average? Is that the question?
Yeah. Given that your three triggers for an upward re-rating, NIMs, cost to income, and credit cost are broadly, in the stable territory.
We'll wait for one more quarter.
Arvind, we have to wait for one more quarter because as we are commenting that this quarter has one or two exceptional items because of lagged effect, and we need to have one normal quarter in terms of our investment book, in terms of our credit cost, in terms of our productivity, So I think, and let's get this COVID-3 also over from our side, and then only we can comment because very, very uncertain environment with very unpredictable matrices around us. So please bear with us, and we'll come back by April to figure out what is the right ROA and ROE for us.
Understood. My second question was on the credit to deposit ratio and the liquidity coverage, the high liquidity coverage ratio that you're sitting on. Given these comforts and the fact that you yourself pointed that you have headroom to reduce the cost of deposit in some buckets, do you see? Can you guide us to some glide path on the rate of interest or the cost of funds going forward? We understand that there is an external environment of increasing interest rates, but putting that aside, do you have any targets for some kind of a sense on quarterly reduction in the SAR rates in particular?
So we actually decide every year, but this is very unpredictable. It's not in your hands. It has to be market-driven approach. So I would say the team has reduced the cost by a good 90 basis points in 1 year, and in total 18 months, we would have reduced by 160 basis points. So in that sense, we are absolutely on track, and because we had that high cost money which got paid during the period. So I would say if interest rate cycles don't go up, you will see some sort of reduction. But if interest rate cycles goes up, we have to price our deposit again. But the best part in AU is this, that we have the ability to transform to the customer and the end customer, because again our customers are retail, those are more in core markets, and in those markets we compete with NBFCs rather than formal banks. So that is our advantage, right?
Yeah. So, Arvind, Yogesh here, and one additional point that my incremental cost of fund is around 5.3 as of now, whereas my AUM cost is 6%, right? So still I have 70 basis point runway going forward, right? Where my AUM cost, maybe medium to long term, can be around my incremental cost. Despite if we take incremental interest rate. So if we take that into picture, still I have some cushion in my cost of fund going forward.
Understood. Okay, thank you.
Thank you. Participants, you may press star and one to ask a question. The next question is from the line of Nidesh Jain from Investec. Please go ahead.
Thanks for the opportunity. So firstly, are there any plans to raise capital given we have reached tier 1 of around 18%? And what is the threshold level of tier 1 beyond which we look to raise capital?
Yeah, but you appreciate that this year's profit, if you add on that, then our capital adequacy is around 22%. And by April, it will be hanging around 20% plus, right, with largely supported by tier 1. So we will take the call at appropriate time because once we complete this quarter and we see how the environment is at that time, how much we can grow next year and how much money we have. So I think a larger call will be taken, maybe around April, but as of now, we are absolutely very comfortable around our capital adequacy.
Sure. Secondly, what are the plans to apply for universal bank license? And any timelines, indicative timelines for that?
No, honestly, because we'll become eligible by next quarter, but I think it's more of a board and a shareholder decision. And ultimately the regulator has to approve it. So we are not in a hurry. We are taking quarter by quarter. So let's finish quarter 4 first, and then think what we should do for incoming years.
Sure. And so lastly, on the growth has been quite broad-based in this quarter. And in the wheel segment, what has driven this growth? Because if you look at the key segments where we operate, we have large share of passenger cars as a key segment. There, the industry has been showing weak numbers. So what has drove the growth for us in this quarter? And probably if you can share some data around the used vehicle financing that we have done in this quarter versus previous quarters. Is that the reason which drove the growth this quarter?
Marketing are there. Our chief of wheels, he must be there on the call.
Yeah. Sorry, if you can just tell me the question. I had dropped out, so if you can just repeat the question, please.
Sure. So I was asking the growth was.
Yeah, please.
Question is around what has been driving the wheels growth.
Okay.
In terms of segments of customers as well as a segment of cars.
Okay. So
especially in the context that new car sales have been weak from an industry perspective.
Yeah. So essentially, what has happened is what has given us volumes is the personal segment, because that is where that was something where we had in the past we were not very strongly present in that segment, and obviously with the bank platform you get that opportunity to get into the personal segment. And with the kind of space that there was available with the NBFCs being a little slow, that also does give you a little more headroom in the new car basis, number one. Number two, also the fact that, there was some movement with Tatas, there was some movement with Mahindras. So while essentially in the past, if we were a little more focused on Maruti, the fact that we were able to move ourselves across manufacturers and across dealerships also gave us an additional room on the upside. On the used car, once again, because the distribution network being available, we were able to approach the organized channels a little more. The unorganized channels, we did a little more activation. So all in all, it was a strategy where we actually expanded ourselves a little more horizontally so that we were able to reach out to more distribution points, and from there we managed to pick up a little more from whatever we were doing in terms of, and obviously we did a little more of tractors, we did a little more of used vehicles, and all those, a combination of personal, commercial, tractor, used, all of that helped us get to our number.
Sure. And just one last question. In terms of distribution expansion, which could be the key states that we are thinking about over the next 2 to 3 years to drive growth. I see that UP and Bihar are the two large states which is very popular, and probably the competitive environment also will be relatively benign. I don't hear any large player operating in that segment, operating in our segment in those geographies. So what are the plans to expand distribution over next 2 to 3 years?
So it is on the wheel side already getting laid down. The plan is getting laid down. In fact, people are being interviewed, and we are positioned to settle ourselves in the next year with the new states as well. So we will definitely do whatever we have learned over the last 20 years in that business and expand it to those states. And obviously we have the parentage of the Mahindra, Maruti, Hyundai people also wanting to, they will also support our going into those states because it just works for them as well. So.
Yeah, and Nidesh, if I can just add, as Sanjay ji announced, we'll be holding a separate, each SB will be coming and presenting to you and all the other investors and analysts. So maybe we can have a more detailed discussion around wheels in that session.
Sure. Thanks.
Thanks.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Renesh Bua from ICICI Securities. Please go ahead.
Yeah, hi sir, and congrats on a great set of numbers. About the PPC numbers which you shared on the current account holder as well as savings account holder. So sir, basically when we look at the PPC, how we look at? I mean, we look at asset to liability or we look at liability to liability?
No, we are looking at all the products of the bank. So, like what I said, that we are looking at customer using a POS machine or a QR or SIP 3-in-1 asset products, life and health insurance. All of these products are included in the calculation of PPC.
Right. So when you alluded to this 1.9 PPC for the current account holder.
Yes.
What could be the major second product, sir, over here? I mean, any...
a good number of customers would actually be using our QR and POS machine.
Okay. And on the savings side, sir, you said it's 1.35?
This side is a mix of products. So many of them have a loan from us or they would be investing through us. Like I said, we have more than 51,000 3-in-1 accounts. So some customers would be making their investments. Many of them would have insurance with us. So all of that gets counted for the PPC for savings account customers.
Oh, got it, sir. Got it, sir. This is helpful, sir. Sir, my next question is on the credit card. So if you can share some, a customer profile, be it in terms of self-employed, and more importantly, if it is self-employed ETB, then the credit card is generally offered to the proprietor or it is offered to the other member of his household.
Sorry, if you can repeat that question, which one?
Yes, sir. So my question is on the customer profile for the credit card. So first, would like to know the breakup between salaried and self-employed. And within self-employed, if it is ETB, then generally what is the strategy? I mean, do we offer the credit card to the proprietor or owner of that unit, or we try to sort of leverage that relationship by offering credit card to the one of the member of the ETB customer?
So I give you some, Sanjay here, so I give you some data point around it. We are issuing 70% card to the ETB of bank, and largely we are self-employed based customer bank, right? So that means that majority of cards are issued to the self-employed people, and those guys are more of a proprietor of their own shops and own enterprises, and 70% credit card has been given to the core market. That means the customers are not that much leverage, and our card becomes one of the first card for them. Our average spend is around 17,000 rupees per card per month. So that is also showing up very well. And and the detailed discussion on this is on 10th of February, where Mayank Mankande, our ex-CRO who is running this business, will showcase his whole deck on the subject.
Got it, sir. Thank you very much, sir. This is very, very helpful, sir.
Renish, just that data point in terms of salaried and self-employed mix, that mix is 65-45.
65 or 35, right?
55-45, approximately.
Okay. 55 self-employed, 45 salaried,
right? 55% salaried and 45% self-employed.
Okay. Yeah.
Thank you. The next question is from the line of Himanshu Taluja from Infina Finance. Please go ahead.
Yeah, hi sir. Thank you for the opportunity. Just firstly, sir, one data keeping question. If you can just repeat, this is the wheels breakup in terms of the new and used. If you can share that.
So that Uttamji already covered in his speech. Almost 50% is new, 25% is used, 13% is cash on wheels. So 60% is new, 25 is used and 13% is cash on wheels.
Okay, sure. And then secondly, what is your actual game plan is on the credit card? Because if I look at this product is more a product of a metro or a urban market, whereas where most of the other top players are focusing on. Whereas if we look at our presence or our focus market is more sort of a rural and the semi-urban. So how do you think you're going to make this as a... So what is the actual plan on this? You just wanted to have this product more for a liability customer, or how you want to leverage this product?
No, I think you are, because, we are commenting that, on 10th of February, we will get the whole color around it. But to give you some data point around is this, that this is a very new product for us. So our focus is on our ETB base. 70% cards are given to the ETB base and 30% are given to NTB. NTB generally are from the urban markets. ETBs are generally from core market. 70% are given to the semi-urban and rural areas, so that that card is their first credit card and the customer is not leveraged. And because of evidence of so much POS machines in those areas, our card is being used extensively now. So our strategy, will evolve with the time, but as of now, it's one of the products where we feel it's very important to become a digital bank, right? And credit card is one of the most important medium to do digital payments. So we are pushing as of now on a very conservative note. But as we move forward, I believe this will be a acquisition strategy for us for a very urbanized customer.
Okay, sure, sir. Thank you.
Thank you. Ladies and gentlemen, take the last question from the line of Nitin Agarwal from Motilal Oswal. Please go ahead.
Yeah, hi. Congratulations on good results. Sanjay, like you mentioned in opening remarks about the change in NPL recognition norms for NBFCs that will help bring a level playing field. So just wanted to understand, are you already seeing the positive impact from this on the ground? Any qualitative comments around this?
Nitin, you have to help me out to get me the other similar market operator numbers, because, what we are saying over the years that for us, a 90 plus DPD versus an NPA classification was a different trajectory, right? But we managed this transition very well, and this transition very well in the last 4 years. And we were tagging NPA on a daily basis. Our NPA rollback was not easy. So we are seeing other companies now coming and building that similar kind of practice, which is actually helping us. Because previously, no NBFC, no HFC were looking to get the whole EMI as repayment, right, at the time of default. So now it's a level playing field, and we are very happy that, our practices and other operators' practices are now similar. And customer is also helping us in all sense that this is the way to go forward, right? So I think this is for us a level playing field. You can compare now our asset quality to a similar customer segment operator asset quality.
Sure. And second is on the contingent provisions. Because we have stated that our restructured provisions are good enough and we don't need to provide more there. And our recoveries continue to remain very strong. We have like 15-20% LGDs against a 51% coverage. So what do we plan to do with contingents? Will we look to hold them on the balance sheet, or would we look to reverse them and increase coverage? So what is the outlook that we can see there?
So important question, Nitin, but I'm sorry, I'm not able to give you answer in this quarter. Because we were doing some calculation in this quarter, but suddenly this Omicron came, right? So we really want to see how long this can be, and God forbid, no other unexpected COVID comes back, right? So we really want to play safe here, and we'll see how we comment on this in next quarter.
Sure. Thank you so much. I wish you all the best.
Yeah, thanks, Nitin.
Thank you very much. I now hand the conference over to Mr. Aseem Pant for closing comments.
Thanks, Nirav, and thanks everyone. On behalf of the entire AU family, I would like to thank you for joining us in the call. Please reach out to the IR team if you have any further questions. Thank you.
Thank you very much.
Thank you so much. Thank you so much.
Thank you. On behalf of AU Small Finance Bank, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.
Thank you.